Well, shares in Facebook's owner Meta have slumped 20% after its latest profit result disappointed the markets. And locally, all eyes are on Westpac, which, despite a big jump in quarterly profit, reported a drop in the margin as it earns on I should say, on home loans. Our business editor Ross Greenwood is in Sydney for us today. Ross, let's start with Meta, previously known as Facebook, of course. What's gone wrong there?
Well, OK, so it's a really interesting story, this. So Meta came out and, of course, Mark Zuckerberg said he was going to spend some $10 billion trying to develop this, and he's explained this today in these quarterly results. Now, the Metaverse, or if you like, Meta, the new company, is really all about trying to create your own image in a virtual sense. And so this is the reason why also a lot of other businesses, including Microsoft, have spent enormous amounts of money in recent times buying gaming companies, because they see that this is the way in which we might communicate and, if you like, converse in the future. And this is the future. But the problem is that the fundamental business of Facebook is advertising. And this is where they see significant competition coming. And so, notwithstanding the fact that you suddenly saw $33 billion worth of revenue for Facebook or Meta during this last quarter, the shares, and we can show you this, have slumped overnight. Now, after hours trading, so this is not the official trading, trading continues after hours. And what we can show you here is that these Meta shares have dropped by some 20% during this period of time. So it is a significant drop in these shares, but it's not the only tech company that's actually suffering some headwinds today.
No, big tech giant profit results out as well. Spotify being one of them, which has a bit of controversy of its own, and PayPal as well.
All right, so we'll start with PayPal and just take you through this. So in this particular case, PayPal again looked okay. The share price, though, has plummeted. Here you can see this, the biggest fall in its history, 26% overnight, $129 and after hours trading. So in this particular case, what's happened is, apart from the revenues and everything that's going on, they've also had to cancel some 4.5 million PayPal accounts because they've done investigations and discovered that people are laundering money through these accounts, that there's actually all sorts of misdeeds taking place. And so they've had to cancel these accounts. So that has not played out well on the market. Let's go to the other one we're talking about, Spotify. And of course, the controversy over Joe Rogan that Spotify paid $100 million to get exclusive rights to. Here's their shares, down 11.4%. Now, it's not just the fact that there's some $6.9 billion for the quarter. It's also about the number of new users that they're actually picking up. But then on top of this, you've got other artists, including the Crosby, Stills, Nash and Neil Young, of course, already withdrawn. They've all withdrawn their music in the past 12 hours or so. And so really, again, Spotify's executives addressed this, said it's not really affecting their numbers so far, but the markets are concerned that as more artists withdraw their music from Spotify, it ultimately could have an impact on users or open up the prospect of competition. Yeah,
we're not quite seeing the domino effect yet, but that could soon still come. Anyway, we should start a podcast. $100 million, Ross.
I know, that's a good idea, isn't it? Bit of a podcast, get ourselves away, so that's all good.
Exactly. You can say the controversial stuff. Anyway, after yesterday's announcement by the RBA about interest rates, what do you think the big banks will take away from this?
All right, so the big banks strangely want interest rates to rise. And the reason is because the big banks right now are effectively chopping each other up, trying to get share in the mortgage market. The two that are most adversely affected by this are Westpac and ANZ, because they had lost market share compared with the growth of the Commonwealth Bank and probably to a certain extent the National Australia Bank, which is more into business banking. Now, today, Westpac has come out with its quarterly results, and they look good, but it's also a result of some recovery. So the Westpac profit jump for the December quarter is up by 74%, which sounds great, to $1.58 billion. We're just waiting to see the first of the Westpac share price right now to see exactly what's taking place. We're expecting to see that. And really, in many ways, you might expect this to be a bit lower. And the reason for that is because of what's called the net interest margin. So I want to show you this. This is about the money that Westpac will make out of home lending in particular. And what's happened is during this last quarter, it's been squeezed. It was just under 2%, you can see there. But as a result of finding competition and even people walking in and refinancing their loans at lower levels, now 1.91%. However, that's expected to turn around as soon as interest rates start rising in Australia and the banks can reprice those home loans to higher margins, make more money effectively out of their customers.
From what Philip Lowe said yesterday, what do you think is the most likely scenario when it comes to interest rates? Tell those people out there that are mortgaged up to the eyeballs what they can expect at least this year, Ross.
Well, OK, so the interesting part about this is that the Reserve Bank has consistently got its inflation forecasts wrong. And so as a result of getting them wrong, you can't have confidence that they've got them right now. So they're saying effectively that inflation will remain broadly under control until the end of this year. But most people out there living in the real world recognise that their prices and costs are rising fast. And it's not just petrol, it's everything else. Now, effectively, what Philip Lowe is waiting for is for wages to start to rise. And so, therefore, that'll be the catalyst for interest rates to be increased officially. My suggestion would be that unions and others pushing out there with enterprise bargaining agreements when they come up are going to be pushing for aggressive pay rises. And that will lead to this wages increase and perhaps will force the Reserve Bank's hand sooner rather than later. The markets say 3 interest rate rises this year. I think that's too many, but I think certainly you might start to get the beginning of the rate rises, of which there'll be 3 or 4 at least by the end of this year.
Yeah, wow. OK, Ross, thanks so much. We'll speak to you soon.
Will do.